All right, David Konrad is Managing Director and Head of Large Cap Bank Research at Keefe, Bruyette & Woods. He is also a Bloomberg Best on JPMorgan. He rates the stock and outperformed. David joins us now from his firm in New York. David, good to see you again. We were here last on January 14th when JPMorgan released their fourth quarter earnings for 2010. Let's talk about this quarter. A lot of people, this came up last quarter as well. We were talking about it. Talking about these loan loss reserves and the release of these reserves. How much does that taint their bottom line in terms of a trading perspective, because the stock is down today?
Well, it certainly creates a lot of confusion in the numbers. Certainly in this quarter, there's about 40 cents that contributed to earnings from under provision. We were expecting more, about 25 cents in our number. I think going forward, you can expect 25 cents in the number of continued reserve release until we get to around 2013. So I think it's going to be a continued driver, but this quarter certainly was outsized. However, having said that, there's a lot of things on the expense side as well that seem to be one-time adjustments as well. There's a foreclosure settlement that I think just hit the tape as I came on the air. That created MSR impairment and higher foreclosure costs. That was around 26 cents negative hit to the number. So some of that was a little bit offsetting when you think of a core earnings run rate.
You know, you just mentioned this story, and we covered it at the top of the show. Lizzie O'Leary was talking about it. Has JPMorgan set aside enough, given the release that we just saw hit the tape?
Well, they certainly have on the loan side. Keep in mind also the rep and warranty, the foreclosure cost, that comes through the mortgage banking line. And the mortgage banking number is very disappointing this quarter with a lot of noise going on there. But the actual cost for the rep and warranty was around $230 million. They actually provided $400 million in the quarter. So they continue to build reserves. And actually, relative to the group, they're in a pretty firm position there.
David, what do you make of JPMorgan's trade-off today? I'm looking at the stock right now. It's been all over the place. It's actually come back from some earlier losses. Now it's down about 35 cents or 3/4 percentage point. Right. You think this is a little selling on disappointment, or is there a valid concern about revenue growth over the coming years?
I think it's twofold. Keep in mind, JPMorgan was the top performing bank stock going into this, right? So we're up about 10% in the quarter. So it was a little bit of buying the rumor, selling the fact. You have some of that going on. The other aspect is there's a lot of confusion about capital management, how it relates to Basel III, and Jamie Dimon's comments about buybacks on the call. He's a little bit less aggressive in his commentary regarding buying back stock. And I think what's confusing is what's the ultimate earnings driver for the company in terms of revenue growth and a combination of capital management. I think ultimately what's going on here is the loan portfolio continues to shrink because they're liquidating the WAMU portfolio. And what they're actually doing is reallocating capital over the long term and to be a top-tier global asset manager. And that takes time. And it's confusing the numbers when you see capital build, loans decline. What's ultimately going to happen here? I think it's going to be a combination of rebuilding the WAMU branches, growing globally in asset management, and share repurchases.
You know what, David, just in 10 seconds, we got to go to our next segment here, but very quickly, how does this bode for B of A, Citigroup, Goldman Sachs? Which stocks do you like?
We like Goldman Sachs going in the quarter. When we did our preview, that was one of our best ideas going into the quarter. And as you spoke earlier before I came on, the FICC revenues from JPMorgan were incredibly strong. They are almost relatively flat with the year-ago quarter, which we're expecting 30-35% decline for the group. So I think that bodes well for Goldman, although there was an acquisition in the commodities business that lifted JPMorgan's numbers as well.
All right. Thanks so much, David. Pleasure having you on, as always. That was David Konrad of Keefe, Bruyette & Woods. He's a Bloomberg Best analyst on JPMorgan, giving us a rundown of JPMorgan's earnings and what that could mean for the rest of the industry.